Today's lesson is going to be 11-3B. If you'll hold on with me just a second, I'm going to get you to where I can share a screen with you. You should be able to see problem 11-3B and Cengage. The instructions for 11-3B are the wage and tax statement data and employer FICA tax. Joe Came Incorporated began business on January 2nd. Salaries were paid to employees on the last day of each month. And Social Security tax, Medicare tax, and federal income tax were withheld in the required amounts. An employee who is hired in the middle of the month receives half the salary for that month. All required payroll tax reports were filed, and the correct amount of the payroll taxes was remitted by the company for the calendar year. Early in 2008, before the wage and tax statements, the W-2 forms, could be prepared for distribution to employees and for filing with the Social Security Administration, the employees' earnings records were inadvertently destroyed. None of the employees resigned or were discharged during the year, and there were no changes in salary rates. The Social Security tax was withheld at the rate of 6%, and the Medicare tax at the rate of 1.5% on the salary. Data on the dates of employment, salary rates, and employees' income tax withheld, which are summarized as follows, were obtained from the personnel records and payroll records. As you can see, they've given you a table here with a list of all the employees when they were first employed and the monthly salaries, as well as the income tax that were withheld from their paychecks. In the requirement, what they want us to do is to make sure we round all answers to the nearest whole cent, and we're going to enter the amounts as positive numbers. Under requirement number 1, they want you to calculate the amount to be reported on each employee's wage and tax statement, which is the W-2 form for 2007. Excuse me. The first employee, Adai, they want you to fill in the gross earnings for this employee. What we have to look at is the date employed. Notice that Adai was employed during the middle of July. So we only have a half a month of July that we will calculate for our gross earnings. Since they were employed in the month of July for half a month, we're going to start with August and we're going to go until December 31st. So this employee has been employed for August, September, October, November, and December. That's 5 months, but since they were employed on July 16th, which is half a month, it will total up to be 5.5 months. So what we're going to do is we're going to take the salary and we're going to multiply Adai's monthly salary by 5.5 years, or 5.5 months, excuse me. What that will do is that will give us the gross earnings until December 31st of the current year. I would recommend that you go ahead and you calculate the federal of the income tax for a die. The federal income tax they have given you as the monthly amount that has been withheld from a die's paycheck. The monthly amount was $17.04. Because a die has been employed for 5.5 months, we're going to take the 1705 monthly amount of income tax, or excuse me, 1704, the monthly amount of income tax, and we're going to multiply this by 5.5 months. The time period was 5.5 months. So the federal income tax withheld is going to be $9,372. The amount of Social Security tax to be withheld, and this is only for the employee because this is the employee's wage and tax statement that we're calculating, will be the gross earnings of $44,880 $44,880 times the Social Security rate. The Social Security rate was 6%. So we're going to multiply this by 0.06 to change it to a decimal, and that will give us $2,692.80. The Medicare tax that would be withheld is also based on 44,880. We would multiply this let me get the correct amount in there. 44,880. We would multiply this by the Medicare tax rate, which was rounded at 1.5%. So I'm going to put in 0.015 as a decimal, and I'm going to multiply it by the gross earnings, and that will give me my Medicare tax that I withheld. For the next employee, which is Casey, you can see that they started at the beginning of the month, so full months until December. So we're going from the month of June, July, August, September, October, November, and December. That's a total of 7 months. So we're going to take his salary per month, and I'm going to multiply it by 7 months, and that will give me gross earnings of $25,200. Since Casey's federal income tax withheld was $533, I'm going to multiply it by the 7 months that he was employed, and that will give you not that amount. So let me try this again. 533 times the number of months from June to December, which was 7 months, is 3,731. The Social Security is calculated based on the gross earnings. 25,200 were the earnings for KC, and then we're going to multiply that by the Social Security tax rate, which was given at 6%. The gross earnings for KC would be multiplied by the Medicare tax rate, which is 1.5%. If you change it to a decimal, it's 0.015. That gives you $378 that was withheld from Casey's paycheck for the Medicare tax. For McGee, notice McGee started work after the middle of the month. So he's just going to have a half a month to calculate for his monthly salary in February. So we would calculate the number of months from March to December. So March, April, May, June, July, August, September, October, November, and December is exactly 10 months. It's 10 and a half because he'll have half a month for February. So the monthly salary was $66,420. We're going to multiply that by 10.5, and that's going to give me $67,410. The federal income tax for McGee was $1,238 per month. We're going to multiply that by 10.5 months, and that will give us $12,999. The Social Security tax would be the gross amount of the wages or earnings, $67,410, times the Social Security tax of 6%, and that will leave you with $4,044.60. The Medicare tax withheld is $67,410 times 1.5%. And I don't have a percent sign on there, so I'm going to have to convert this to a decimal. 0.015 times 67,410 will give you $1,011.15. For Moss, you can see he was employed on January 1st, so his monthly salary for 12 full months. $55,200 is his gross earnings. The income tax that was withheld monthly is $783. multiply this by 12 months, and that will give you 9,396. Multiply the gross earnings, 55,200, times the Social Security rate of 6%, and that will give you the Social Security tax withheld. The gross earnings times 0.05, the Medicare rate will give you $828. For Stewart, December 1st means that he only had 1 month that he was paid, so his total wages will be $4,500. His paycheck was deducted for $783 for federal income taxes. That's 1 month. Excuse me, I must have picked up the wrong figure. We're on Stewart. Yes, I did. Should be $758. Then we're going to multiply 4,500 times 6%, and that will give us the Social Security tax. The gross wages times 0.05, the Medicare rate is $67.50. For Tolbert, you can see that he only worked half a month in November, and he would have worked all of December. So 1.5 months, we're going to multiply the monthly salary by. The federal income tax for Tolbert was $446 per month. We would multiply that by 1.5 months. The Social Security tax would be $48.75, the gross earnings, times 6%, the gross earnings of $48.75 would be multiplied by 0.015, and that will give you $73.13 rounded. For Wales, He started work on May 1st, so he worked for the months of May, June, July, August, September, October, November, and December. 8 months. Multiply the monthly salary, 10,500, times 8 months, and that will give you $84,000. The income tax was $23.59 per month times 8 months, which is 18,872. The Social Security tax is multiplied by the gross earnings. The gross earnings would also be multiplied by the Medicare rate to get the Medicare taxes that were withheld. The next step is to total up your Social Security taxes that were withheld from your employees' paychecks. Start all over again. Did it again. I can take that off of there. I don't believe it'll allow me to. So let me try it one more time. Well, I'm just having trouble today. Anyway, you're going to total up all of these, and you'll get your Social Security tax. Let me try it one more time with another calculator. You're just adding them up. 2692.80, 1512, 4044.60, 3312, 270, 292.50, and 5040. Finally, you're going to add up your Medicare tax, same way. And 4,290.98 is the total of your Medicare tax that was withheld. They also want you to calculate the following employer, this time, payroll taxes for the year. Notice they want the total of the Social Security. The total of the Social Security would be matched by the employer, and the amount is $17,163.90. For B, they want the total of the Medicare taxes that would be matched by the employer, $4,290.98. Remember that the employer has to pay state unemployment compensation. The rate is 5.4%, and it's based on the first 10,000 of each employee's earnings. So in this problem where we've got each one of the employees, if they went over 10,000, the amount over 10,000 is not subject to unemployment tax. So a die would be subject to $10,000 only taxes. Now the employer has to pay these taxes, but it's based on the employee's first 10,000 of the earnings. Anything above that is not taxed. So 10,000 for a die would be taxed. For KC, since their gross earnings was above 10,000, 10,000 would also be the full amount that could be taxed for that employee. For McGee, they too went over the 10,000. So McGee could only be taxed on $10,000 worth. Since Moss went over 10,000 in earnings, he too is only subject to 10,000 for earnings. All of Stewart's earnings would be subject to the unemployment tax. All of Tolbert's earnings would be subject to the employment tax. The reason is these employees did not go over the base of $10,000 each. Wells certainly went over the base. He is only taxed on 10,000. or his employer has to record the state unemployment tax based on that. So out of all of these earnings here, the employer has to pay tax on $59,375. We will take that $59,375 and multiply it by the state unemployment compensation rate, which is 5.4%. We're going to make that a decimal at 0.054. And that will give us the amount of the state unemployment tax at $3,206.25. For Part D, the federal unemployment compensation tax is 0.6% on the first 10,000 of each employee's earnings. So again, we would look to see which employees went over the $10,000 base. And you can see there are several employees that went over that base. Stewart and Tolbert, however, did not. The total that they could be taxed on is $59,375. We would multiply that by the tax rate of 0.006. When you convert this to a decimal, you're moving your decimal places 2 places to the left, and that's why I put in 0.006. The tax amount is $356.25. In Part E, they want you to total the taxes. $25,017.38. And that's all that you had to do for this particular problem. So I'm going to stop sharing this with you. I'm also going to stop recording. Bye-bye.